Welcome to The Pulse with Lauren Bango, a DLL podcast series. This is your place for tips, trends, and insights into the world of healthcare finance. Now, here's Lauren.
Welcome back, everyone. I am joined today by Johnny Finance. Welcome back, John. Nice to have you back.
Thanks for having me, Lauren. It's been a while.
It has been a while. It's been too long. For those who haven't listened to John's previous podcasts, John is our head of program management in the healthcare team. He's also a macro trends aficionado. Is that a good way to phrase it?
Aficionado. Yeah, I like that. I like the aficionado term.
So it's been an exciting week in the macro world.
To say the least, Lauren. We had a very exciting meeting over the last 2 days with the Fed. And looks like some positive news out of the committee.
So tell me more. Recap the results, if you don't mind.
Sure. Well, getting down to it, the Fed decided not to increase rates, which is fantastic. And I think the market had expected that we would not see another increase this year. So there's some relief there. But I think what is even more exciting is the fact that they alluded to potential cuts next year. Now, the Fed speak...
That is exciting.
Yeah. Now, the Fed speak is always going to be somewhat clear as mud and give you some outs here and there. But if you're able to dissect some of what they're trying to say is, hey, inflation's under control. We still have a robust economy that's growing. So that term, the soft landing, is very much in play and in sight. And if that is in play, then there's no need to continue to raise rates.
That's awesome. Now, did they give any indication on timing or what we should expect or anything like that?
They did not. So that's where the Fed becomes very hazy as to trying to expect what is to come. Now, I can tell you what the market's predicting, though. And as on this podcast, as you know, Lauren, we don't speculate. We can just report what is going on. So this is no investment advice, but the market's saying that there's a high likely that the target Fed fund rate by the end of next year, so that's the end of 2024, will be in the range of 4.5 to 4.75. And if you think about where we are now at 5.25 to 5.5, that equates to some cuts, potentially 3 rate cuts of 25 bips over the course of next year. When they occur, don't know. Will that continue on track? So many external factors as we've seen over the last couple of years. A war can dictate certain things. Inflation could creep back up. So there's so many external factors. That's why the Fed is not very clear as to what the direction is going on. But what we can say right now, inflation is under control. It's on track. And unemployment has not ticked up mightily as a result of these increases in rates.
Which is amazing.
It absolutely is. So if you pay attention to the stock market responded quite positively yesterday. The S&P had one of its best days that it's had in a couple months. The Dow the same. So there's a lot of optimism right now that this elusive soft landing is very much a reality for the markets.
Amazing. So we are at mid-December. We've got a few weeks left of the year. And now we're talking about potential rate cuts next year. We have customers who need equipment today. What's that mean?
Yeah. So, if we focus just on healthcare specifically. Now, healthcare, we went through this major Super Bowl, if you've listened to previous podcasts, over the last couple of years with the pandemic, and healthcare spending went through the roof. And now we're on the other side of that spectrum, where healthcare spending has actually reduced over the last year compared to previous years, which makes sense. But what they are expecting for years to come is a more stabilized, consistent growth in the healthcare spending area and you're talking about a growth of around 4%, a little bit north of 4% there. So that stabilization is perfect for our industry and allows our customers and our vendor partners to be able to predict what's going to happen next in the market, and gives you that comfort that, hey, this rate environment is no longer way up, way down, swings left and right, and that stability should give you comfort with moving forward with financing equipment.
So what I'm hearing is stability is the name of the game.
Everybody, in whether it's investing, whether it's financing equipment, you're looking for stability, and it looks like stability is on the horizon.
Awesome. So John, you are a seasoned vet of this podcast, and I just realized you were my first guest this year, and you are the final guest of the podcast this year. So we are looking for that final nugget of the year. Give us, what is your nugget for our listeners as we finish out 2023?
Yeah, so my final nugget for all our listeners out there, all 5 of you, look, happy holidays. I hope everybody's enjoyed this podcast and some of the nuggets that, Lauren, you've been able to share with the team and enlighten us in different industries. And I hope that this has given people more comfort when it comes to financing. Financing isn't a scary thing at all. And I hope that this podcast has shined some light on some of the unknowns out there when it comes to financing in our industry.
Thank you. And thank you all for listening in this year. We're looking forward to coming back in 2024. Happy holidays, and we will talk to you in the new year. Thanks, John.
Thank you for listening to The Pulse with Lauren Bango, a DLL podcast series. The opinions expressed in this podcast are solely those of the participants. Nothing herein should be construed as legal, tax, accounting, or investment advice. Join us again for the next edition of The Pulse. And thanks again for listening.